with Michael Waring, founder of Galileo Global Equity Advisors. Good morning, Michael.
Good morning.
I'd like to ask you about the history of Galileo and talk a little bit about the genesis of what Galileo is today. I think Galileo is one of the last true independent asset managers in Canada.
I think you're right. There's a dwindling supply of independent managers, and we're not affiliated with any big financial institution. We're very independent. We began in 2000, and we've always focused on smaller and mid-cap growth opportunities, where we see opportunities to both grow the top line and the bottom line and have increasing dividends over time. So you can go elsewhere to buy the top 50 names in the index, but we focus on names that are off the radar.
I like when you talk about that, the undercovered, under-researched, under-marketed opportunities in the space, and how that's a little bit uncorrelated to the exposures that most advisors and investors currently have.
No, I think that's correct, and we focused on this for all of our career, trying to find names that are undercovered, where we see big investment opportunity, where we see 3 to 5 years of runway ahead of us from an investment standpoint.
The other thing I particularly like about our funds is the fact that you're a major shareholder in all of them.
Yes.
And a substantial one.
I think it's important that you eat your own cooking. Very important.
And that's a big differentiator with the big institutions and the big firms who have these mega funds, and you don't have that level of degree of alignment with investors.
I think to be successful in this business, it takes two things. It takes a lot of curiosity, and I think it takes a high degree of conviction, and we certainly have a high degree of conviction in our investment process and the types of stocks that we go after.
In an earlier interview, I asked Frank about sort of over the last 10 years, there's been this big move into passive ETFs. So it's like I call it consolidation at the top, because the passive ETFs hold market cap weighted stocks, generally of the larger indices, the TSX, the S&P 500. And the cost of that has been both small and mid cap undercovered opportunities, but also independent asset managers. So how do you think this trade will reverse? I mean, it's already been 10 years, and we know that these trades don't go on forever. Do you see a potential for this trade to reverse, and over the next decade an opportunity for this more uncorrelated asset allocation that we offer?
I personally believe the move to passive investing has actually created a bigger opportunity set for us, because all it means is that we have more underfollowed, undercovered, under-owned stocks to pick from that offer greater investment opportunity and greater value. So I really see that this has been helping us in our investment process, and it probably will reverse at some point. I mean, no investment process stays the same. Mm-hmm. So there will be some kind of reversion. When that'll happen, I don't know. But in the meantime, we see lots of opportunities on the investment side in many markets that we look at.